Hey everyone, and welcome back to another episode of Markets in Turmoil. Today is September 19th, 2020. Yesterday was Friday, and the S&P traded down about 1.5% on Friday. And it's actually been a few days since the last episode. That's because we finally actually broke out of the chop area and finally started heading towards what I think was going to be the downside target. Now in this video I'm going to talk about where I think the markets will be headed and why I think that. I'm going to look at two things. I'm going to look at the levels and the indicators to help me explain what's going on. Okay, so on Friday here, we actually had a pretty bearish looking candle. Price action was pretty weak for the entire day. The bulls didn't really start buying until the afternoon, and buying was pretty weak. We closed pretty low, although we did fill some gaps on the downside here. And I'll explain why exactly we ended up having the low of day at this level right here, as once I look at the indicators. But we definitely broke out of the chop area here, as I mentioned in the previous videos, and are headed towards the next, what I think at least is the support slash demand zone here. Now there's several reasons why I think that this is a supply slash demand zone here, in the 327 to 319 level. One of them is because prices were traded around here for quite a while in July as we chopped around this area before breaking out higher, which indicates that there's a lot of interest in this area. Another one is that I like to look at the volume profile. So if you look at the volume profile from here all the way back, all the way 2 months, 4 days. Now if we look at this volume profile here, this indicates the amount of volume basically that was traded at each level here. Okay, and as we can see, this level between 327 and 319, there was significant amounts of volume traded in this 2-month time period. Around here, right below where we ended off here on Friday, volume was pretty light, and it's sort of a no man's land. So basically, if prices were to move below here or move lower, they would move pretty quickly as there isn't a lot of interest at these levels. What's interesting about this volume profile is that if we move the volume profile all the way back here, we can see why exactly we chopped around in this area for so long. It's because in August, and earlier in August, we traded around here for quite a few sessions, which created huge interest in this area as well as huge volume level. Now, what's also interesting is that this purple line here, if you can see this slight purple line here, that is the point of control, which is basically the level of largest volume in the entire time period here. This lines coincidentally lines up with the 0.382 retracement for the fibs, which might mean something, but it just means that this is an important level to watch. Now if we drag it back over here, basically this is an important level to watch, as well as of course the 0.382 fibs. Now just looking at these levels, I wouldn't be overly bullish even if we hit these levels. I would have to see a bullish engulfing candle or a strong bullish session, at least in regular trading hours, not in overnight futures, because overnight futures obviously can be manipulated pretty easily because of low liquidity overnight, and they can easily be pumped up. As for indicators, these are just a few trend lines I like to look at. Of course, 50 days moving average is a pretty common trend line. We actually closed below it. We broke and closed below it, although in the previous sessions we bounced off of it. This time we closed below it, and that's definitely bearish, at least for the short to midterm. There's also this is pretty interesting, a volume weighted average price, the VWAP, daily VWAP. We failed to break above of the VWAP here. Now a break above it would have been bullish, but we couldn't manage to break over it. So any action below the VWAP is considered fairly bearish. There's also a short-term target from this VWAP. This VWAP is from the lows of since all the way back in June. So this is a anchored volume weighted average price, and this might also be a good area for a temporary bounce. As for why we had our low of day right here, we just have to look at the Bollinger Bands, which coincidentally has the lower bands being at this exact point. Usually, many times, the Bollinger Bands are pretty good at covering most SPY action, as SPY is not very volatile compared to other stocks, essentially. So basically, altogether, let's look at all of this together. And what we can see is that there is sort of a magnet towards this zone, as well as prices heading lower. Midterm, I definitely would need to see a solid buying day. Nothing like these wicks over here, a solid engulfing candle before I think I would consider going back to being long. And as always, I hope this method chart helps, and stay safe out there.